Hello, welcome to European Open briefing for Thursday, February the 14th. I'm Rafi Berjan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing a bit of a pause in the equities rally this morning as investors await the outcome of the US-China trade talks that are due to formally start today and is expected to last into tomorrow. We are seeing the US dollar extending its gains. So normally if there is improving optimism surrounding trade talks, the dollar tends to fall back, but we're seeing the safe haven yen continuing its retreat this week, and the euro still under pressure, so that is boosting the dollar index, currently at around 97.26. Dollar yen has just broken above the 111 level. We did see some trade data out of China which came in much better than expected, so the Australian dollar did get a bit of a lift from that, up by 0.2% at the moment at 0.7105. The Kiwi also up a solid 0.4% at 0.6823. European currencies are somewhat more muted. Euro and the pound both down against the US dollar. And in commodities, oil getting another boost this morning from the improved risk on sentiment. Let's now take a closer look at the US dollar. There are reports suggesting that President Trump could extend the March 1st deadline when tariffs will rise on 200 billion worth of Chinese imports. He might extend that by 60 days. So that suggests that the talks are going well, and a deal is within reach for President Trump to consider that. Though there are other reports saying that that's not true. There are also concerns about whether or not President Trump will sign the funding bill agreed by Congress, as there's aspects to it that he's not happy about. So that's still not a done deal whether or not we can shutdown can be averted. We did see some stronger than expected core CPI out of the US yesterday, so that did also give the dollar a bit of a support, as it suggests that the Fed could resume its rate hike path later this year. And we're going to have more data coming up later today. Retail sales and producer prices, those are due at 13:30 GMT, and we can see here in the chart that dollar yen comfortably breaking above the 111 level. The Australian dollar, though, despite its recovery this week, it's still well off the peaks from the prior week following that dovish RBA meeting. So Chinese exports jumped by 9.1% in January. Forecast for a drop of 3.2%. So that did give the Aussie a bit of a lift. It's now back about the 0.71 level. So we can see those still there. It's somewhat a muted recovery, mainly the RBA weighing on it. Looking at now the euro, we can see it's slipped back below the $1.13 level, hitting a 3-month low 1.1245. Yesterday we had disappointing industrial output numbers for December, and this morning we had German GDP numbers for the fourth quarter, which came in flat versus expectations of a 0.1% growth. So that was again disappointing, and now we've got renewed political risks for the Eurozone. We could get a snap election in Spain after the government there lost the budget vote. Although that's not a major threat at the moment, if there are signs, if a snap election is called and there are signs that populist parties could make gains, that would be negative for the euro. And quick word about the pound. It's also struggling. It's 1 month low at 1.2823. We did get somewhat disappointing, somewhat weaker than expected inflation numbers for January yesterday out of the UK, and today the focus will be on the British Parliament. They're due to vote on Theresa May's motion to basically stick to a plan, and in terms of renegotiating the backstop, and then to also allow her two more weeks to do that. There's a chance that some Brexiteers could vote against that, and that could spell trouble for Theresa May. But the more threatening amendment, which was to extend Article 50, or to force the government to extend that, that's not likely to be put for a vote today. That will likely come at the next meaningful vote on February the 27th. That's it for me. Thank you very much for watching, and have a great day.